Hey guys, it's Chris Wong. I'm filming this video as of September 12th, 2024, and I'm going to be talking about a few purchases I just made on Questrade margin account. So as a disclaimer, I'm not a financial advisor, I'm just guys interested in building a portfolio. So I saw the market starting to pick back up from last September 6th, 2024, when I looked up the graph of my portfolio and saw there was a massive drop last week. And now it's starting to pick up. My margin power is coming back, and the negative balance I have in my margin account is getting lower again. I remember watching a video from Unconventional Wealth Ideas, and I also watched a video from so-called Steve-O about short income ETFs, or just short ETFs in general, which are based on the inverse of the actual underlying itself. So there are actually funds out there, for example, like if the S&P 500 goes down, then there's an inverse S&P 500 ETF where it actually goes up if the underlying goes down itself. And YieldMax has several short ETFs that do the opposite, and at least they pay out monthly distributions. So YieldMax has short ETFs like the Tesla one, CRSH. They also have NVIDIA, which is DIPS. They have the Coinbase one, which is FIAT, and the inverse of the NASDAQ 100, YQQQ. So it looked like on the stock chart that in general, the short ETFs from YieldMax, they were actually higher in share price on September 6th when everything else went down. I never really understood the maximum share price the short ETFs can go up to, but YieldMax released at least 4 of them, and they might release more in the future, which at least there's monthly distributions. In case I made mistakes, I'll get the money back. So I decided to just make small purchases as I want to try them out. I decided to purchase a few shares of CRSH for Tesla, DIPS for NVIDIA, and YQQQ for the NASDAQ 100. And I'll probably just average down over time when the share price of these ones go down. So in this case, that means the underlying itself will be going up. From the YouTube videos I watched who talked about these short ETFs, there was a point saying that if you do use margin, the short ETFs can actually help have some protection in the event there's a market correction. Because if you're ever in a margin call and all your funds are just based on the underlying itself, like if the S&P 500 goes down and all your funds are S&P 500 based only, then that goes down too. But if you have at least an inverse fund that does the opposite, then if the indexes go down or your underlyings go down, then the inverse will go up and it will actually have some protection from margin call. I also heard from other YouTube videos talking about the Tesla sandwich, the NVIDIA sandwich, or the Coinbase sandwich. At least with having them balanced out, averaging down, then there's some protection regardless of how the market is doing. I also just watched other YouTube videos this morning and just saw on the YieldMax website that they reformulated the way how distributions are going to be paid out. Like I just heard YMAX, YMEG will start to pay out weekly, and when I check out the website for the single stock ETFs, it looks like some is going to be paid 1 week. Like there's Group A, Group B, Group C, and Group D. So each group will have its own week. Now, whether it's a good thing or a bad thing, I know some people say it's a good thing, some people say it's a bad thing. I think if you're trying to pay down your margin as fast as possible and you're trying to keep your buying power as high as possible, I'd rather have weekly pay. The main reason why I did consider getting YQQQ DIPS and CRSH is because the margin requirement on Questrade is now 30%. At one point it used to be 50%, and if I did buy into them at that time, it would take away a lot of my buying power. So once I saw it went down to 30%, I thought about it more and did consider it. I did look into FIAT for the Coinbase one, and I did not want to get it yet because the actual Coinbase one is down, CONY. So I might as well take some risk and try to buy more CONY if I do have enough buying power. That way I can average down my position. I'm not saying this is the right move. This is just what I'm doing for myself. Because CONY is down in share price, I see that FIAT is actually up in share price. It's even more than $20 to buy FIAT versus buying CONY, which when I checked the price today, it's around like $12. And I hope you guys liked the video. If you guys liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.